Good morning, everyone. My name is Adrienne Klasa. I'm the Development Finance Editor of The Banker at the Financial Times. I'm very excited for this conversation. I'm very excited to be here with Michael and Ismail to discuss the very important question of how do we bring financial inclusion to the people who have been left out of the financial sector around the world. As the moderator, as the MC said, billions of people around the world are either without a bank account or without any sort of access to financial services or severely underserved by the ones that they do have. So in order to talk about what we're going to do about this, we're going to fix this in the next 25 minutes. So to start off, let's set the scene. Ismail, what is the problem that WorldRemit seeks to address through its work?
We're helping digitize international remittances, an industry which involves about $600 billion of remittances, on which, particularly when you look at the developing countries, which is about 3 times the size of development aid. The problems with the traditional remittances, which were cash-based, was that they were very costly, slow, and particularly in developing countries, excluded those who were unbanked, which had a lot of challenges in terms of how they collect the money. And so we're now partnering telcos that have launched successful mobile money services that are helping, really driving financial inclusion and helping the unbanked people to get basic accounts on the mobile phone. So we're connected to about 130 million mobile money accounts. And so we're the largest player now sending remittances to mobile money accounts. And what is a mobile money account? It's somebody who's got a basic feature phone where the mobile number becomes the account number. And that is really what is leading the digitization. So we're a part of that digitization.
Michael, how about you? Accion.
For billions of people, the global financial system works pretty well. Most of us in this room take for granted you have credit cards, you have debit cards, you can get appropriate insurance for your home, for fires. You can get money to finance your education. You can, and all those things are available. And even think about this: you get your bills come in generally on a monthly basis, and you get paid on a monthly basis, and that's really convenient. And we take all that for granted, and we should take it for granted. But for 3 billion people, they are invisible to the global financial system, and the global financial system doesn't see them at all. The global financial system is a failure for nearly half the world. A typical person living in poverty is a woman on a farm who gets paid once a year at the time of the harvest and has to make that income work all year, and yet she lacks a safe place to save. Just even think of that phrase, a safe place to save. We take that for granted. She may have to travel hours to make a single utility payment to keep the lights on, or a school payment to keep her kids in school. We are living in a digital revolution, and all of a sudden we can reimagine how all of that can happen. But for billions of people, they live in a cash world, and that's another part. They don't develop any kind of credit history because they're invisible. They're still transacting, and that's the problem we're trying to solve. We're trying to make the financial system work for everyone.
So when we say unbanked, that's pretty self-explanatory, but how would you explain underbanked? What does that mean? Ismail, why don't you start off?
So underbanked means they may have an account, say, with a bank in somewhere in Africa, Asia, or Latin America, but they may not be using that bank because of the costs associated with the way banks operate. They may not be able to access their funds as and when they need. We're talking about a lot of people who live in small villages, towns. So, and I think, and that's why we hear a lot, when you look at the World Bank data, a large number of people who have got bank accounts in the developing countries. But the World Bank is defining somebody with a bank as somebody who used the account at least once in a year. If somebody is using a bank account only once in a year or a couple of times, those are surely not even bank, not let alone say that they are underbanked. Yeah. So it's a lot of those who are not using what the banking sector has to offer.
Ismail just touched on it. We've seen hundreds of billions of people have gained access to accounts, but in many cases they're not even used in a year. So that's severely underbanked. And if you think about that a little further, what is that circumstance where you have an account but you don't use it for a year? Pretty much it's likely to be the government made a payment to you and you somehow withdrew it immediately into cash and then you never went back. So yeah, you check the box, this person has an account, so technically you're banked, but you really don't have the financial tools you need. And if you think about your own life, I use financial tools every single day, and it makes my life easier. And what we're trying to do is develop the tools that can really help people to help themselves. And if you're getting paid once and taking the money out in cash and then living in a cash world, you're nowhere close to using those tools in a way that really help your life.
So it sounds like we,
And I think a point particular to that, which is, whereas we have challenged with the banks who claim that people are banked who are not really using the bank account, compare those to people who have mobile money accounts who are actually using quite frequently, particularly the active, the GSMA or the Industry Association defines an active account, an account that is being used every month. And you have, in the case of M-Pesa, people who are using like 10 times a month. In the case of actually some countries like Somaliland, the average user is using the mobile money 30 times a month. So those are the kind of people who are actually moved to digitization, relying, using the mobile phone, the account on their mobile phone virtually quite frequently and sometimes every day.
So it sounds like we really have a quality versus quantity issue, particularly when we're talking about banks, telcos to a certain extent as well, but particularly with sort of more traditional bank accounts. How do we solve that?
Well, let me describe, I want to correct the introduction. I'm not the founder of Accion. I am the CEO. Accion was founded in 1961, and we've been working for decades now on trying to create a financially inclusive world. Most recently, we've become a fintech venture capital investor. We created the world's first global fintech fund for the underserved, and we're also the leading seed investor in fintech for inclusion. And so between those two vehicles, we've looked at thousands of fintech companies that are trying to help the and underbanked, and we're seeing just spectacular innovation. And all of that is about usage and quality. It may be governments and it may be big companies that want to check the box of opening an account, but a small startup company, that's not good enough. You really need usage in your account. You need to make sure that the tools that you're developing are useful and really helpful to your clients. So I do think there's a lot of innovation, but it's very, very early days. And I do think that over time, we will build the products and services that will really help billions of people living in and near poverty help themselves.
I think the problem we have is that we don't have credible data that can help us even understand the scale of the problem. And then we can think about how we can help. Surely, the telcos, some of the fintech players in the developing countries have made a lot of progress, came up with innovative services that are really having a major impact in terms of helping financial inclusion. But the data is not there. I mean, we're relying on the likes of the World Bank, and I think who ask even the wrong question and focusing more on about the number of bank accounts rather than what is happening in a lot of developing countries in terms of the mobile money, fintech players. We don't have that data. So I think the biggest challenge we face in the case of the financial inclusion and unbanked, underbanked is that we don't have incredible data that can really help us understand.
Where do you think we could go to sort of find that data?
I think we first need to look at the disaggregated individual country data. We need to talk to the fintech players that are gathering masses of relevant data. when we talk about, World Bank reports the number of people who have bank accounts, and then we look at that those are not being used. But in the case of telcos, for instance, the numbers underreport or underestimate the impact, because typically one mobile money account could be used by an extended family of 20 people. So that might be counted as one, whereas, and one of the reasons why they are used quite a lot, whereas World Bank is counting somebody who has used a bank account only once a year. So first, I think defining the issues, relying on data from fintech players, private sector, rather than going through government channels, which is the bulk of the World Bank data.
But just to go a little further on the World Bank just put out the Findex, which every 3 years they do a 150 country survey on the state of financial inclusion, and it's there may be problems in the data, but it's the best global data that we have. And again, I do think they overly focus on accounts and account openings, and that's not really the real metric of financial inclusion. But if you dig a little deeper, and mobile money is one of the brighter spots, the use for payments, but if you look across the developing world, savings in the last 3 years declined. Credit has been flat, and resilience has gone down. And what is resilience? Resilience is a question, and Ken mentioned this in a US context just in the last presentation, but the question of resilience is, in an emergency, could you get approximately 1 month's income? And the answer is, in the last 3 years, resilience has gone down in the developing world. So if you think about what that means, it means the most vulnerable people in the world are actually more vulnerable today than they were 3 years ago. That's not the direction we want to move in. So that's very, very troubling in this data.
Do you see any tools that could sort of help to steer us away from that?
Yeah, so again, we get to see all around the world spectacularly innovative early stage companies that I do think over time will have an impact, but on the grand ocean of data, they're not showing up in the data today. But yes, distances that used to be insurmountable, now there's no distance that's insurmountable. And transaction sizes that were too small to be commercially viable, today there is no transaction size that's too small to be commercially, and data analytics are allowing us to see people that have been invisible. So long term, I'm very optimistic, but frankly, the data of the Findex saddens me and sobers me. It's sort of, I thought we would have made more progress on developing tools that were useful and beneficial to people in the last 3 years than the data suggests. So long term, I'm very optimistic.
But I think I believe we've made a lot more progress than has been reported. If you look at last year, there was a major drought in the Horn of Africa. It is one of those droughts which happen every 20, 30 years, which historically used to lead to famine. We think the successful mobile money services in the region have really helped avert a major famine because of how people kind of share money, the role mobile money played. So those are not really reported by the World Banks and the likes. And I think we're missing because banks are not part of that. I think the World Bank relies on data coming from banks and governments. And how do those make a difference? It is because with the instant communication, people are now talking to family members abroad, and somebody can get their money instantly from London, Dublin, New York, even small amounts. We've seen people who are skipping their lot, and sending $4 or $5. And that money is going to somebody who lives in a small village. They can use that money to buy water or food. That is what we've seen happen. And in fact, the mobile money services in particular are helping revive the traditional wealth sharing mechanisms. These people come from, particularly a lot of the diaspora, those who are working in the big cities, from communities where people share wealth. And so distance is no longer a major issue because of the instant communication, because of the ease of sharing money. So we don't see a lot of those kind of examples in the types of reports we get from the World Bank.
So there's a clear policy and socioeconomic development case for why financial inclusion, why reaching all these people with financial services is important. Why should the private sector care? What is the opportunity there for them?
This is a huge potential market. To an audience like this, the opportunity to not only make a huge social impact, but also generate huge financial returns. This is a great potential market, and we're seeing spectacular innovation from entrepreneurs that are coming up with new ways of meeting the financial needs of the poor. I mean, and that's why in the long run I'm quite optimistic, because I do think there's a real market opportunity here. I'll give you one example. In Kenya, a company called Apollo is using global satellite data to assess the needs of smallholder farmers, small 1-acre farms, which is an enormous part of those billions of people who are left out. And based on global satellite imagery, they can assess what type of seed, how much seed, what type of fertilizer, how much fertilizer, and estimate the farmer's ability to repay a loan. Then they send all that material to the farmer, and the farmer repays at the time of the harvest. That's spectacular. This is an early stage company, really early stage startup company. It could fail for a million reasons, but it could also, if it succeeds, it could change the world.
And I think I would also add that now we've seen what some of the financial inclusion digitalization has done, is that we're seeing a shift from informal to formal sector, shift from cash-based economic activities to digitization. A big chunk of the developing economies historically used to be informal, cash-based, where it was difficult to measure, understand what people are doing. But now, with digitization, and particularly mobile money, we can see what people are doing. And one of the reasons why Kenya revised its GDP upwards by 25%, because of largely M-Pesa. These were genuine economic activities that were historically difficult to measure. So new startups, companies can build on top of those and serve those customers, because there's a data about how these people are, these people are doing. So there are huge opportunities actually in this large sector of the population that have historically been neglected.
The government policy is trying to formalize the informal sector. We're seeing in Latin America, for example, Mexico, Peru, Colombia, and Chile all have recently, in the last 2 or 3 years, required digital receipts and digital invoices for all businesses, including small mom-and-pop shops. And again, they're trying to formalize the sector and increase tax compliance. But that's a tremendous source of new data. And a company called Confia, one of our partners, is using that data to see small mom-and-pop shops that, again, have been invisible up until now, and then they can lend against that data. So that formalization is very powerful.
I'm curious about some of the risks, and particularly the risks to consumers. We're talking about environments where financial literacy and financial education can often be low. You're all of a sudden presenting people with all of these new tools, which do have consequences attached to them in the forms of fees and interest rates. What does that mean in terms of how you need to work with these new entrants to the financial services sector?
Yep. I think the way we work with is that we should not let banks stifle innovation. And I think it's the banks who promote the idea anybody working with doing financial inclusion, fintechs are risky, whether they are cryptocurrencies or not. And look at the case of M-Pesa. Kenyan banks came together and said that, tried to shut down M-Pesa and said that how come telco companies are getting involved in financial services? And I think it was the Kenyan Central Bank which rejected that, allowed M-Pesa to succeed. But every day, thousands of innovative ideas are stifled and killed by banks because they say it's risky. Yeah. And I think it is not risky when a small player. Banks are risky because there is a systemic risk, and we've seen what happened during the financial crisis. A small fintech player trying something in Ghana or Philippines or Colombia cannot pose a systemic risk to an economy. But that's what banks are doing, and not allowing access to bank accounts and so on. So that is the major issue we have.
Accion created something called the Center for Financial Inclusion, which is an industry-wide think tank on these issues, which, and CFI, the center, has created the world's first global consumer protection campaign for the poor, which is now across the world and has really become the standard. But it really is focused historically on microfinance and making sure that the 7 consumer protection principles are really implemented on the ground by these institutions. But all of that needs to be rethought in the new digital world. I mean, transparency is really hard when you're working on a phone and you can't even disclosure, what does disclosure mean when you're working on a feature phone? So I think you're totally right. We have to worry a lot about how do you take consumer protection principles into the digital world. We do have to worry about over-indebtedness. These are real concerns that we need to tackle.
Now, we're just about to wrap up, but we are in front of a techie crowd here. And so I want to ask, traditionally sort of, or at least in the past few years, financial inclusion has really tracked the development of mobile penetration. What is the next technological development that you guys think is going to really make the difference here? Is there a place for crypto? Is there a place for blockchain? What about smartphones?
I personally think blockchain, early days, may have the notion of frictionless transfer of value is very attractive, especially when you're talking about the base of the pyramid. Cryptocurrencies and the volatility, I don't really see that happening. I wouldn't. I don't really see it being relevant to the base of the pyramid, at least anytime soon. I don't know if you have a.
I think in remittances we have there are 2 issues. One is how fast can we deliver funds. Today, of the 130 million mobile money accounts we're connected to, we can deliver funds instantly. So, because we have APIs with banks, telcos, other retail networks, so I don't think cryptocurrencies could add, or speed up what we're doing in terms of the remittances. Where I think blockchain has relevance, and I think it would make a big difference in our industry, is that to settle our partners, which are banks in developing countries or telcos, of course, we rely on the banking system to wire £3 million or whatever to Philippines or Kenya or Colombia, and that goes through the conventional banking to settle our partners. That is, I think, an area which is quite costly and time, it takes time. That is where I think blockchain has a role to play in terms of can we really use blockchain to avoid going through the conventional bank.
And on that note, there's so much more that we could discuss, but we're going to have to wrap up. Michael, Ismail, thank you so much, and thank you to all of you for listening.
Thank you.